Welcome to Capital Currents, where the flow of business news and market trends keeps you ahead of the tide. I'm your watchdog, and today is Friday, August 30th. Yelp is suing Google, Samsung wants Nokia's mobile network business, and shareholders of Marathon Oil voted to approve the $16 billion acquisition by ConocoPhillips. We went over the Nvidia's earnings yesterday, and to quickly recap, Nvidia beat on estimations across the board, increased guidance, grew 120% year over year, started shipping its new Blackwell chip, which cost $40,000 each, and did a $50 billion stock buyback. Even after all this, the stock fell 8% yesterday. I did find out that some bars in New York City had an earnings call watch party, and they really did treat it like the Super Bowl. Google is really putting its lawyers to work. Google is back in court, and this time it's Yelp that's taking them there. Yelp alleges that Google is abusing its dominant position to stifle competition. Yelp claims that Google is diverting traffic away to use its own results, and that is diminishing traffic to Yelp. This lawsuit is using the US government's antitrust win against Google as a precedent for its own case. If you forgot about that case, a few weeks ago, a judge ruled that Google maintained its search monopoly through exclusive distribution agreements. Yelp is also urging other companies to consider suing Google over its monopolistic practices. They specifically mentioned Expedia, Glassdoor, and Zillow to get involved. This is like the ALS Ice Bucket Challenge to sue Google. A Google spokesperson actually responded to this lawsuit, saying that Yelp's claims are not new and that similar claims were thrown out years ago by the FTC. The statement also says that Google will vigorously defend against Yelp's meritless claims. Yelp is understandably super salty. They actually left a review on their platform saying that Google is the largest information gatekeeper in existence. I love it when corporations are petty like this. Nokia has been exploring various options to divest from its mobile networks business. This deal could be valued at up to $10 billion, and Bloomberg reports that Samsung has shown an initial interest in acquiring certain Nokia assets as it could help its own presence in the telecom infrastructure business. This announcement comes right after Nokia's recent earnings report of a 32% drop in the second quarter operating profit. These discussions between Nokia and potential buyers are still in the early stages, and there is a chance that no deal will be reached. I'll keep an eye out for any updates and report back. Breaking news for you this Friday. Marathon Oil shareholders voted to approve the $16 billion acquisition by ConocoPhillips. Marathon Oil and ConocoPhillips expect the purchase to close late in the fourth quarter of this year. This deal is currently undergoing an FTC review, and I'll report back once it's officially approved. But there shouldn't be any problems with this. That's all the business headlines I have for you. Let's take a look at some stocks making moves. Shares of Affirm are booming this morning after the company reported a better than expected earnings and a strong guidance for the rest of the year. The buy now pay later company saw revenues jump 48% from a year ago, and the losses shrunk to only $45 million this quarter, way down from the $200 million in the Q2 of last year. Buy now pay later continues to be a popular option for customers, and now Affirm is looking to launch in the UK by the end of the year. Affirm stock is up more than 20% in reaction to these earnings. Best Buy also saw their stock rally 10% after the retailer bumped its earnings guidance for the year and showed signs that its turnaround plan is working. Best Buy has been stuck in a 2-year sales slump because many customers were holding off on buying new electronics and other discretionary items, but they now have a new pep in their step. On the flip side, a stock not doing so great today is Dollar General. The stock is down more than 30% after cutting its sales and profit guidance for the year. This one doesn't make much sense to me. If discretionary spending increased, then shouldn't stores like Dollar General and Dollar Tree have great business? Sometimes the markets don't make any sense. I don't know. That's all for today's show. Enjoy the long weekend. There will be no show on Monday as the markets are closed. Stay safe, keep navigating those waters, and see you Tuesday.